Natural gas inventories came out. Covered GDP there. We got natural gas storage came out at 52 on an expectation at 53. So that is not much of a difference on the forecast. It is, quite a bit of a difference from the previous number. So how different is it from the forecast? How different is it from the previous number? Was the previous number revised? How different is it from recently reported numbers? It's dramatically smaller than recently reported numbers, okay? And how different is it from just the historic averages? So we can go and look at the actual report and look at that. This represents a net increase of 52, which is a lot smaller than the net increases we've been having for the previous week. And it says that this year we were at 85. 50 stocks were 586 BCF, higher than last year at this time, which actually would mean that storage is higher than it was last time this time of year. Okay, so there's more, even though stockpiles, stockpiles decreased less. So think about this. That's what I'm trying to help you understand. Well, the number's lower. Why is this? This represents an increase of storage from last week. Stocks right now, the stockpiles of natural gas storage are at 586. That's higher than last year at this time. So not only did they increase, which isn't not as much as usual, but the stockpile, this is the important number. The stockpile is higher than this time last year. And it's higher than the 5-year average. Okay? It does say in the East region, they were a little bit below. Not much, but a little bit below what the 5-year average is on the stockpile reserves. Okay? So we look at that and we go, all right, let's see here. The producing regions were above the 5-year average. So I'm seeing a lot of above, meaning we have a lot of stocks. We're still increasing. We're above 5-year averages. There's one area where the stocks are a little bit lower, but that's not near as much. It's more than offset by what we see in the other regions. Okay? And so if we look at all that fun information, then we go, okay, well, now let's pull up a chart on natural gas. Let's see what happened at 10:30 when this report came out. Because it's not just, and this is a lot of mistakes people make, when a report comes out, it's not just the number. It's also the other information in the report that needs to be looked at. Okay? Now, usually that move's going to happen too fast that you can't do much about it anyway. And so let me open this chart up, and we'll check it out. Okay, so right over here, market's just chopping all morning, just waiting for the results to come out. We actually do get a break below ice with some exceeding volume earlier in the morning. Pardon me there. Earlier in the morning. And then it goes into just a complete pause mode. Can you say iron butterfly? Okay. Up until about 10 o'clock, it starts to make a little move leading into it, comes right back up, look at that, right back up to ice. And then the release comes out, and it's just boom. And then all of a sudden you see the volume going up. Really not as big of a boom on the natural gas inventory as we see, because it comes out the same time every week. Okay? So it actually was a lower than expected volume amount. Now we're seeing this live. Lower than expected volume amount. And this is forming a bar every minute for you. And we see it move up. Doesn't really move the expected amount. Doesn't move the expected volume. But it does come right up to the lower level of ice and bounces right off of it. Starts moving on back down. And volume is increasing on this move back down. Notice it moved up without any normal volume increase right here. Okay? But then all of a sudden it started moving back down, and all of a sudden volume starts going up, confirming that move. We had a little bit of a pullback for like a bar, and then it just started going right on back down. Said, hey, this is just chop. Don't worry about it. We don't have a couple green bars in a row there. And so chops right back around, keeps going down. Volume keeps increasing. Volume dies off right here. Okay, so volume dies right at this point on the chart and starts decreasing down. How do you know when that moves over? Okay, when you're trading, and again, I talked about this on the Dow chart. When you're trading and you see volume exceeding expectations or not, that gives you a big clue. Okay, this is not going to be as big of a natural gas move as normal. But also, when you see that volume start to die off, and it's at a 1 deviation, which, by the way, this is right at a -1 deviation level, it's time to take profit. And it may be a great time to butterfly the market and take some easy, flat, paint drying cash. So stay right there. We'll be back right after this break. So we're talking about natural gas. It popped right on up without any increasing volume at all. Just stayed flat right after the news came out there, like just for an instant. I mean, matter of milliseconds. And then afterwards, we got, pardon me, a declining move where it moved on down, but volume started increasing, and it was increasing the entire time. Moved on down, moved on down. And this is the last part where I was talking right before the show broke, where all of a sudden the volume has declined rapidly, and we're at a 1 deviation level. We're also hitting institutional buy zones, okay? And we create an institutional sell zone as well. So we get institutional buy and sell zones happening right here. This all of a sudden creates a range for us, these bigger, thicker buy and sell zones. We can take advantage of these zones and start doing butterfly trades, or so sorry, iron condor trades. I can't get my finger to that pause button fast enough. Or iron condor trades right in the middle of that. So let's look at exactly how would that work. Okay, if we're going to go in and we're going to maybe do some iron condors, then what would be the process? And how could we find an iron condor when we saw an opportunity set up like this? I mean, there are ones I plan out and set up and put together, but also when I see nothing happening, I look at those as well. And sometimes those could be the best opportunities. If, what's like if FX is hopping like it is right now, but like dollar index is moving like crazy, things like that, but the commodities have slowed down, then I can hop on over and trade that. So let me pull up the scanner. Let's go and let's look at the spread scanner. Okay. And how do I keep clicking that link? There we go. And let's see here. We go in and just pull up natural gas. Open that up. All right. All right, see what we got here for dailies. And then we'll put some other pieces together. Let me take a picture of something I see over here real quick. All right, get that done. All right, so over here, we are going to look, see if we can find any positive premium. And again, if we can find any positive premium, I'll make sure I'm going to reset all my settings to default. So if we're going to get rid of the instruments I don't want, get rid of my settings again, okay? All right, so the question becomes, do we have anything with positive premium? We don't. If we don't have anything with positive premium, that means the market's really dead, okay? There is zero expectation of movement. Okay, so first, now we should have done this back around, 11:30, whenever the market, basically right when the show started up. So a little bit before that, I guess. But whenever the market came on down, but also that volume, it continued to decline, but that volume dropped. Okay, and as soon as that volume went sidewards, right there, so we had a peak up and then boom, right back down. So right around here, and we started this chop zone, which is what we got right here. This is where we should have looked at this. So if we were looking at it, what would have happened? Okay, because it's nice to go, well, you should have, could have, but would it really have worked and all that fun stuff? Well, let's look at around 2790. What do we have there? We have a 2800. Let's see, that might be the closest thing we have to the end of the day. So we've got a couple 2800s. Okay, so on these 2800s, here's what I'm going to do. I'm going to look at the 2 o'clock ones, okay, when we get back. And we're going to actually look at the charts of the spreads and see how the price reacted during this flat time and what that would have meant. All right, so stay right there. We'll be back right after this break. And so looking on over here, checking out, we're at a 1 deviation move. So volume came on, like the market came on down hard. It hit a 1 deviation move. That alone is the reason for us to think, hey, it's probably going to slow down. Volume has dropped dramatically. That's another reason for us to think that the market is going to slow down. Okay? Start getting a bunch of chop signs. And so what I want to look at was these 2,800 contracts, see if there's anything there that might be useful. So, for instance, if I click on that, okay, I can't do that at the moment because I have to do an update. Lovely. Okay, here, hold on 1 second. And let me go over here. Let's see if that will work. Okay. All right, let's try it again. Yeah, there's a new enabling feature I have to put in on it. I was going to go through, I was going to show you the iron condor on that. Maybe I can just do it from the other platform. Hold on 1 second. Let's do it outside of it. And over here, okay, so I want to look at the 2800 2 o'clocks first. There we go. And let's change it over to last mid. Always go to mid. Yeah, it's not really giving me any quotes on that one. Let's see if I get quotes on the other one. If I get quotes on one of these 2 charts, then I can give you a great example. It's almost like it's trying to pull up a binary chart, but it's really confused. 1 more second. I'm doing all this on another screen, trying to save you any confusion from it. There we go. Okay, that's a little bit better. Okay. So we have this one chart. Let's see if it'll let us open both. I'm not a big fan of using the Linux platform. It's clunky, but okay, there we go. We'll put these 2 over here. There we go. Let's make sure I got both of them on the mid price just to be consistent. Right over here, we'll go this. We'll choose this to mid price. Okay, now let's go back to the time we were looking at. So it's saying right about here, volume's leveled off. You know, so somewhere between 11 and 11:10, easily. We're seeing, you know, very flat markets. Okay, so right between 11 and 11:10, we're seeing really, really flat markets. And the market is at 2790, give or take, right about that time. Okay. So, if we go over here to 11, and this is the lower spread, so we'd be buying it. 2790, we got about, we can buy it right around 2780. So, we got about a 10 tick edge, 20 tick max prop potential. So, 20 ticks of maximum prop potential collecting on 10 pips of premium. If we go on over here, and, you know, let's make sure we just line up the best time. So right here we said, yeah, 11. Okay, I just want to make sure. And grab the right screen. Here we go. Okay, so right here, actually 11, it's a little bit better. It's around 27.75. to 27.78. So 25 pips. We'll just go with an easy number. 25 pips because you could have bought anywhere in this zone. We'll say 25 pips of maximum profit potential. And then we go over here to 11 on this side. That 28.07, 28.11 is pretty high. There's not a lot of profit potential in there. I mean, we're talking about 10. So overall, we're looking at about 30 to 35 ticks of profit potential. 35 ticks, it can move up or down from 2,800. So if I go back over to a chart and I were to draw a rectangle, okay, from 2,800 right here, what this means is it can move up 35 pips, ticks, whatever here. 0.0035, I guess to be really specific on that, but we're down 35 from 2,800, so 27.65. Right there. If it stays in between that range, if you would have gotten this trade at 11 o'clock, okay, this is the power of this, and people they just don't see it, and I try to explain it. But you see it on the indicator with the premium, it'll help you. But, I mean, if I get 35 ticks of max profit between the two, okay? I'm not just talking premium here. I'm talking about max profit because you make that additional money, too, if it goes one way or the other, okay? If I get 35 ticks here of max profit, I talk about this on Iron Condors all the time on news. I'm like, your minimum profit needs to be, which comes from your maximum. Your minimum combined maximum profit needs to be no less than this amount. That range right there, this up 35, down, up 0.035 and down 0.035, that's break even. Anything in between the two is profit. And if I get outside of it, I'm going to lose $1, okay? For every 0.001 it's further outside of it for each contract I do. Is that a trade you would do? Would you do a trade looking at this chart, okay, of natural gas here, going into the end of the day, 2:30 session, okay, is when it closes. It's had its natural gas inventory report, so it had a little explosion, and then it popped down, and then volume just dried up, okay? So a dry lake bed right here, nothing going on. And you can do a trade that inside this range, you profit. Would that be a trade that would be worth considering? Yeah, definitely. So, I'm not having to be a chart master. I'm like, hey, it went down to one deviation. The volume dried up. There's a high, and I got, my charts, I got, a chop indication on there. We're bouncing between a support and resistance. I mean, there's all this stuff I can go into. But bottom line, that's a lot of it's not going to do anything. Okay? It's not going anywhere, to be a little bit more specific or grammar. Not the grammar. But, it's not going anywhere. I don't think it's going to go anywhere. And so when I see that kind of setup, when I see volume dries up, price drops down, add a deviation move, starting to bounce in between, a supply and demand zone of institutions, that's a great time to look at a premium collection trade. People go, yeah, I do that on binaries, on butterflies. Yeah, and I love those too. They're great. But they lose everything. So if let's just say you can make 30 or 40, you could lose 60. Or you get out when it hits it, okay? A little bit more management. I like it, but a lot of times you can get them wider. Okay, granted, a lot of times you can get them wider than you can on, not wider on a shorter time frame. They're more readily available. But they also have a higher risk with them. This is a trade you can put on your stops, go to lunch, and walk away. Where could your stops be? Well, they could be at break even. When I have a trade like this, I go, how much can I make? If I can make 30 pips, I usually like to go in and put my stops at a 1-to-1. That gives me more than enough room, so if it comes out of here a little bit, bounces on back in, I'm okay. And very rarely do I lose 1-to-1. Very rarely do I make the entire 1-to-1. And so usually I make, let's say if there's 30, maybe I'll make $15, $20, $25. But then I can put this thing up 70 pips from where it was at. So I put it all the way up here at 28.70. Okay, so it'd have to break through even, the upper volume level down here. And 70 below. So we're talking 2,800 down to 27.30. So way down here. Okay. And that's my break-even levels. which is just 2 times my max profit, above and below my center strike. Okay? I mean, is that a trade you'd be comfortable with, where you make money as long as you're inside this box? The 1-to-1 with a stop would be at the edge of this box, and every tick you're closer, okay, every 0.001 you're closer to the center, you make more and more and more of that maximum profit. If those are trades that you might like to do, that could be awesome. And they can even work in highly volatile times. I mean, you go in there, and even with a lot of volatility, you can get on a good trade. I mean, let's just take the same box, all right, and let's move it and say you put it on like at 10 o'clock before the announcement came out. All right, so we're going to put it on over here at 10 o'clock. So right there. And we'll say 2,800 because we know there was a 2,800 at least going to the end of the day, right? And then let's move this one. This is before natural gas inventories, okay? And you put that on, and you put it on the 230 contracts way out here. Okay? Grab this one. And I guarantee you would have got more than 30 or 35 bucks, okay? But even if you just got $35, look at what happened. Okay, you're still inside the range. It's come outside of it a couple times, but you're still inside the break-even zone at this point. And if it moves up at all, you make profit. Now, if you would have got 50, okay, let's say you got 25 on average on both sides, okay? Then you could go, instead of going 35 below 2,800, you can actually go, what would that be, 50 below, so down to 750 down here. You could have brought this up. If you got 50 pips, up to 28.50. So right there. I think we're just starting our boxes off a little bit odd. There we go. Okay. You can put that on before natural gas inventories. Is that a trade you would have been comfortable with? So, came up, came right up to the range, came right on back down, didn't even break outside of the premium range. So many traders are trying to call direction, or so many traders are trying to get that low risk, high reward, massive payout, win the lottery trade, that they miss out on, like, hey, there's a reason most people lose those, and you could be the guy collecting all that premium. Okay? So be that person. Collect that premium. Check it out. I mean, this is among my favorite trades. I think if you really watch this a couple times and start realizing what I'm saying, that we want that positive premium, and that was on a flat setup. I mean, this is on a volatile setup, which means I get more, when like a news report is about to come out. But even if it went up here outside the expected range, that still would not be at my 1-to-1 level where I'd be concerned with the trade. So, pretty cool trade that hopefully we can take care of. All right, so let's roll it over. That's natural gas for the day. And by the way, that's every Thursday you can trade the natural gas inventory report.